In this video, I reviewed the price of oil in terms of fundamental and technical analysis. Hello everyone, it's Sajad. I hope you're having a great week. So let's look at the oil news first and then we'll get onto the charts. So let's have a look at the demand first for oil. So we've heard recently air travel showing signs of declining. That again is no surprise, and especially here in Europe, we're seeing some resurgence when it comes to the pandemic. Now, this particular stat is interesting. So 7-day moving average of worldwide commercial flights declined to the lowest since mid-August. So you're seeing here trading volumes have fallen, but the volatility isn't particularly extreme, as we'll see on the charts in just a minute. So the article is suggesting we're kind of range bound at the moment in terms of price, which is true. However, I feel in the next few weeks we could have massive volatility in the oil market, which again I'll get onto in just a minute. Now, in terms of actual supply, what they're expecting from Libya is output to be restored and Russian exports to increase. Now, what are we seeing at the actual oil refineries? Well, no surprise, we're seeing more and more job cuts. Now, this is important when we look kind of further ahead, 6 to 12 months. So we'll come back to this as well. But Marathon, the largest independent oil refiner, is laying off a significant percentage of the overall workforce, so 12%. And they've cited there, again, no surprise, consumers working from home, airlines operating at a fraction of their former flight schedule. Again, none of this should be a surprise, especially if you've been watching this channel and related ones where it comes to looking at the markets and also what's going on with the economy. So what are we seeing in Europe? Well, diesel kind of demand has weakened, even though the winter demand period is approaching. Now, this is where it gets a little bit interesting here, but because especially here in the UK, I don't know where it is where you are, so please comment below and let everybody know. But here, people are avoiding public transport for obvious reasons. Now, with that, there is a little bit more in terms of cars on the road as a result. But because a lot of people are working from home, call centers and things like that, there are still not as many cars as there were previous to the pandemic. I don't think anywhere near. And what I'll try and do for you in a future update is we'll have a look at actual data from Google and other kind of driving apps, because sometimes they release this type of data just to show us how many people are actually kind of moving around, going to shops, going to work, etc., as compared to pre-pandemic. So you see here, what they're actually saying is the gasoline markets are holding up as people avoid public transport by driving their cars to work. So that puts pressure on the plants to continue processing crude, even if it means churning out more diesel. So it's a kind of like a necessary byproduct. So what's the situation with crude inventory supplies? Let's have a look at US supplies right now. So this is the black line here on this particular chart. And if you have a look from March, supplies were, well, basically inventory was increasing significantly. And then we got to kind of a plateau around June. And thankfully for oil companies, that kind of inventory has been reducing as demand has increased and as there were obviously supply restrictions with certain countries, etc. But what are we going to see from here? So we're still seeing the inventory go down, which is a good sign. But again, the worries are the same. More restrictions coming into place, more restrictions on air travel. That's the concern for the next couple of months. So I suppose when you look at these type of articles, what you really want to do, or what I try to do, is I try to see what the companies themselves are saying, the oil companies, the CEOs there, the CFOs, what they're saying, because they will comment on how demand is looking for the next 6 to 12 months, how inventory stores are looking for the next 6 to 12 months. And honestly, there seems to be a lot more concern recently around oil than there may have been a month or so ago when we had that bit of a rebound effect. So let's have a look at the chart and see how that translates to actual oil prices. So I've got US oil here, and it's a 4-hourly chart, and I'm looking back. I'm mainly concentrating on the move we had from the lows in April all the way up to where we are now. I think we got to a high of around 43, I think it was 43.77. We had an impulse move down, and we've been sideways, range bound. So where's the next kind of move here for this market? That's what we're looking at. So first thing I like to do is, even before we get onto the structure, let's just have a look at the moving averages and let's have a look at the momentum oscillators to see if we have any clues there. Now I'm here on a daily chart now, and I'm having a look at the moving averages. We've got the 50 and the orange line is the 200. So it's interesting here. Neither line is particularly acting as support or resistance in any way, but the crossover of the 50 and the 200, that did happen, the positive crossover. But if you have a look at the slope, So what we're seeing here is the slope of the 50 is downturning again, and the slope of the 200, the longer moving average, is still continuing down, suggesting we still have a kind of more longer term, 6 to 12 month, oil is still in a downtrend. And when you actually zoom out and you have a look, that is what we see here, lower highs, despite the recovery that we've had. So it's just something important to note. And if you have a look at the RSI here, where there was a point here earlier, well, last month now, in September, where we were oversold and we're back to the middle, but on the 50 line, we're kind of struggling to get back into the upper half here, which is interesting to note as well. MACD in terms of momentum, very little momentum at the moment in terms of price. Again, we're looking on a daily chart. We've had a few crossovers there, so I don't think they're significant, but also worth noting, we're under the zero line on the MACD and we're struggling to get back over it again. So we're continuing underneath. So these are just some warning signs, but quite strong warning signs, actually, I would say, as compared to what we were seeing in oil in the last few months. And to be honest here as well, if you go all the way back to kind of the beginning of June, the price is exactly where it was back in June. We didn't really get any strong movement upwards. We just kind of got sideways grinding movement more than anything else. If you look at the exponential averages, so they give us a better idea of recent price movement. You can see a lot of them are kind of converging now. Sometimes that can happen, this convergence of moving averages, just before we get a significant move, or we can just get choppy price action as well. So no significant movement, just sideways movement for a while. Although I still think actually we're going to get a significant breakdown potentially, and we'll get onto a 4-hourly chart in a moment, and I'll discuss that in more detail there. On the weekly chart, in terms of candlestick patterns, it was this move down here. It was kind of like an engulfing pattern, and we had no follow through really from that move back up later in the month. So that's something else to know. So on a 4-hourly, what I want to show you now is the actual structure itself. And by the way, if you're enjoying the videos, don't forget to click the like button and subscribe to the channel if you're new. I'm trying my best to do regular updates on the major markets. So let's have a look at the structure here. So I think it's now quite likely we completed an either an impulse move here or a corrective move, something completed up here. I think there's a good chance of that. It's not 100% guaranteed, but there's a good chance. So what we're actually doing here is we're correcting this whole move. Now, if you believe, and I think there's a good chance that we may have begun a brand new bull market in oil that could last, 2-3 years, maybe more, where we might see ridiculous oil prices again, like $100 plus. Well, then what I'd expect to see first is a move up and a decent correction, and then we get another move up. And this looks incomplete to me. That looks like one impulse down, some correction or a flag, and we should get some follow through at some point. But the thing is that follow through could potentially be very, very deep for oil. We could get back into the 20s in terms of the price of oil before we see a move up. Now, if you think about the fundamentals and you think, well, Sajjad, can we really get that again? So around these levels where we're getting resistance, around the $28, $27 level, can oil really drop that low? Well, if you think about the fundamentals, it'd be hard to argue why it couldn't, given where we were just back in March, April and May. Why couldn't price return there, given what we're seeing now in terms of airlines demand? We're seeing obviously the output reduced for oil as well, people cutting back on jobs in oil refineries, etc. There's a lot of kind of let's call it headwinds for oil. But then again, what would then explain a massive rise? Well, eventually you might get to a point where I believe it might just all bottom out in terms of supply and demand, and then slowly when we get past, let's say, a second wave of the pandemic and we're now getting back to some sort of normality, the amount of oil there will be a lot less, because a lot of these producers will be expecting demand to stay low for a while. So we're not talking like a few weeks here, we're talking possibly a couple of years. And if that's the case and supply is low and suddenly you get high demand, that should push speculation and oil prices higher. Just my opinion though. And obviously we have to look regularly at the economic data on a week to week, month to month basis to see how all of this eventually plays out. So let's talk about targets if this is what's going on, which again, we really can't say for sure. But if this is a 1-2-1-2 setup and this was the first impulse move, we can take our fib extension here and we can get rough estimates. If we did get a further move down, the areas which I'd be interested in, and I want to look left as well to see whether those were previous areas, for example, of support and resistance, is the 1-to-1 ratio here. So this kind of area here around the $34 mark. So you see there was resistance here and it acted as support. That would be important if we got a strong move down, but also further, maybe even all the way up to $28 mark. Now it all depends on how this structure is actually playing out. At the moment, I'm considering whether we're just getting a simple ABC correction, as you could argue the most likely, just a short, sharp correction that might last a few more weeks and then we move back up. But again, it could get into a very complicated, very deep correction. It's really kind of hard to predict here, but on the bullish side, the structure here, it doesn't look promising at all, and the price action in the last 2-3 months doesn't look promising. I would ask the question, the fundamentals right now, are they better or worse than they were here back in August, which was kind of like driving season? You'd have to say they're actually a lot worse in Europe, US, and I imagine other countries as well. So if that's the case, it shouldn't be any surprise if we see a retracement in oil. But again, that's just some of my thoughts I'm sharing with you. Please let me know what you think in the comment section below. And especially if you get any significant movements in oil, I'll do another update very soon. Thanks for listening.